if you're a beginner trader and you haven't started yet, or you're someone with experience and you are trading and you may be successful or unsuccessful, I want to introduce you to a new strategy that I've developed. I am a full-time trader since January 2019, and not too long ago I started vibing a lot with the community, and I know that there's a lot of beginner traders, and a lot of them have jobs and all of them have other things going on in their life, so they don't really have the time to take the right trading approach. So that's why I started this channel, to try to help people out, for free, without any online courses or anything. So if you guys are new, I want to introduce you guys to my strategies. Another thing that's very important is that, like, I give free trading alerts on my Twitter, so you guys can follow me on Twitter for free trade alerts. Again, if you're not a profitable trader or full-time trader, I would not suggest you to follow my alerts with a live account. Try them on paper. I mean, the trading is a journey and it takes time. You don't want to drop all your money. You don't want to gamble too much in the beginning before you work systematically. So I want to introduce you guys to a strategy that I've developed that has a system behind it, and it will help you build a trading career or just improve your trading overall. So the most important things in the strategy themselves is, like, the platform that I use, as you can see, is Think or Swim by TD Ameritrade. You don't have to use TD Ameritrade as your brokerage to use Think or Swim. You can just open an account with them, with TD Ameritrade, and they let you use Think or Swim without even funding your account. But the cool thing is that Think or Swim makes it very, very easy to understand the pulse of the market, and I'll explain. Okay, so right now the stock that we're looking at is SGMS. Okay, so if you're a complete beginner and you don't know, during the day, if you use a screener, there are going to be stocks that are the highest gainers of the day, and you can look at the screener yourself and find the stocks that are up the most during the day. And this is one of these stocks. This is SGMS. Okay, so it's one of the top runners of the day. So a lot of beginner traders go for stocks more like Apple and Tesla. But what we want to do is we want to work with the top 5 daily gainers. That's what I trade. This is what I alert. So as a beginner trader, what you need to do, just like I said, you need to get Think or Swim. That's your first step. Second step is to use a screener. I have a link in the description. I use finviz.com. It's free, no subscription needed, no nothing. So use the screener to find those stocks. And then when it comes to actual Think or Swim and the indicators that you have, you only have to have one indicator. And I already talked about it in my videos. And this is what we see. That's the only indicator that is on the chart right now. That's the VWAP, volume weighted average price. Basically has 3 bands in here. Now, how you add it, it's very simple. All you have to do is just right click, go to studies, add study, all studies, V to the W, then you have VWAP right here. That's how you add it. So once you have the VWAP on your Think or Swim, and that's why I'm saying you have to have Think or Swim, because other charting platforms would have VWAP, but they won't have the 3-line VWAP. You will see 3 lines. Basically, you will have a middle band, the middle line, that's the VWAP, the upper band, and the lower band. So I'm gonna say again what I said in my videos. The VWAP is what you use to understand the price, and also understand if it's time for a good entry or not. And I'll explain. So the middle band basically says that, like, it represents the average price by the volume of the day. So it means that if you see the chart itself touching the VWAP line, the middle VWAP line, it means that that's the average price. If you see it on the lower band, it means that it's below average. And if you see it on the upper band, it means that it's above average. Now, I want you guys to remember that this is a intraday thing. So you can't really use the VWAP to determine if it's a good entry or not for, like, swing trades. It more represents, like, the intraday activity. So as an example, we can see in here with SGMS, And by the way, the reason that I'm saying that like you need to use sink or swim is because you have pre-market and the market hours on the chart itself. So the grayer area in here, that's the pre-market activity, which is very important. I use the pre-market activity a lot because sometimes when the stock is higher on the pre-market than what it is during the market hours, it means that it's more like a resistant type, and sometimes without the right volume it can just dump. So it really depends on the news that you have, and it's a lot of things that you're going to like learn with your trading journey. But right now I'm talking, okay, you are a completely beginner, right? You have no idea what you're doing, right? First of all, the biggest tip that I have to tell you is like the biggest tip that I have to give you is do not use real money. I really recommend to use paper trading for a while, like a month, 2 or 3. My biggest recommendation is actually give it like 90 days on paper trading, and use the same amount of money that you would use in real life, because paper trading accounts give you more money than what you would use. So let's just say if you have a paper trading account with 20 grand, virtual grand, but you only intend to start trading with a grand, use the paper trading account with 1 grand and see where you go from there. So what we want to do is basically like start and practice on paper. Why on paper? Because day trading is a lot about practicing, and people don't know that there's a lot of practice involved. There's a lot of things that you need to learn. There's a lot of things that you need to learn to sharpen your trading and your executions. You see, a lot of people, the biggest mistake that new traders do is that like they just watch a few day trading tutorials and just go for it. But they make a lot of mistakes and they trade out of like gamble. But I want to teach you basically like how to trade. I like to call it the impulse trading. Why impulse? Because like the chart goes like a hard impulse, goes up and down, and this way you can predict when it's the right time. When it goes up, when it's the right time to buy and sell. Before it's sold off. So basically, just like I explained, you have a chart, you have the view up on it, the volume weighted average price. So as you can see, in between days, the view up is going to change. So what we're looking at is mostly on the intraday, the day itself, the view up. And a day like this with SGMS, you can tell that the view up, just the view up bands itself, I'm not talking about the chart, just the lines of the view up are just mostly in the first 30 minutes of the day are extremely up, and then it's just consolidating from there on. So that's when you know, when you see a shape like that, that's when you know it's going to be hard to go back to the highest price of the day. From these areas, it's mostly sold off. So again, as a complete beginner, new trader that has no idea what you're doing, the way you want to look at it, the way you want to approach it is basically the lower bands and the middle band of the view up would be the best areas to buy a stock, but the stock has to be on an uptrend for that. Okay. And then the upper band is more like a resistance line. That's more when you need to sell. And a big mistake that traders do is basically buying it on higher points on the day and selling it when it goes down. So that like buy high, sell low. That's a mistake. That's how you lose money trading. So the way you want to approach this is, first of all, make sure that the stock itself is on an uptrend pattern. Okay. That's how you know that it's going to continue going up. Okay. Now it can be an overall uptrend pattern, and it also can be like a timeline uptrend pattern. So it really depends on the time that you live in, and I'll show you guys. I'm using the chart. I'm going basically back in time, 10 years ago, on this stock SGMS, and as we can see, it basically started like consolidating from the small areas, like the areas of the $10. It had some breakouts into the $20 levels. After every breakout, there is a confirmation, there is a small correction. So there's another thing that you guys want to be aware of. Like a lot of times, like after a breakout, there is a breakout, like the stock goes up in price, it will correct a little bit. So that's why I always recommend, if you're not going for a long-term investment, and if you go for a day trade, and you have a loss, just sell, close your position, don't hold your position. That's the worst thing that you can do. If you are holding a position that you're down on a stock that you don't know, on a company that you don't know, it's not going to go back up, man. Like it's such a huge risk. You don't really know what's going to happen, and you don't want to gamble like that. So basically, if you want to follow the strategy, what you're going to look for is more like to enter a stock in the right area and then sell it quick with a profit or a loss. But if you do it systematically and you take the time, and you don't just enter and exit, you do it more like in a systematic way of position adjustment, just like I explained in my videos, and I'll explain a little bit more in this video. It's going to be a long class of basically putting you all the ideas in your head and explaining you guys what you need in order to trade right and not just gamble trade and not just be like, oh, I sold it whenever, like I get a lot of people that say like oh, I just sold it and it went up to the sky. Okay, like I lost money. Like it doesn't make sense to me. So what's your system? Like what did you do? You just bought it because you thought you should buy it and you just sold it whenever? I mean, that's not how you day trade, and that's not how you make like profitable. Like this is not how you become a profitable day trader. What I want to teach you guys is how to really become a profitable trader. So you have to listen and you have to like give it the time, because it also like the time in the trading matures you, and the time really teaches you the most. Because again, in the end, like the chart itself, the buy and the sell, it's all about pulse. Okay, so we have like sometimes it goes up, sometimes it goes down. You need to understand the psychology of the chart, the psychology of the buyers and the sellers, and also the psychology of the pattern, right? But a stock like this, as I mentioned, in the past 10 years, basically for the most part, it's been on an uptrend, right? So this is a stock that you can like count on, but also it has a huge volatility, because we can see that like from these levels, the $6, the $10 levels, just like we saw, it jumped all the way to the 62 levels, right? And it usually changes with like news time, like it depends on like what the market is hot about. This time, like the time that we live like in currently, the market is hot about like mostly COVID stuff, and electric vehicles and tech. So there was going to be a lot of stocks in a lot of like biotech companies and healthcare companies that like you will see that in the past year or in the past 3 months have been like on an uptrend, just because of the COVID and the news. So again, there's always events, there's things that happen and make the stocks go up, and there's things that make the stock go down. For an example, like news will make the stock go up, but up to a certain extent. So remember, news is not an indicator that the stock is going to go to the moon forever. There's always a correction, just like I explained. So and there's also news that make the stock go down, like offering or just like debt or bankruptcy. There's many reasons. So you have to be prepared for everything. And the thing about trading, again, like going back to never hold a stock, is that like, remember guys, we have pre-market session, the market session, and the after-market session, after hours. Okay, so anything can happen in those hours, right? There can be drastic changes in stocks, especially stocks that like you have no idea about. There can be drastic changes into the stocks during those times, the pre-market, the market hours, and the after hours. So that's why it's very risky to keep stock. So you do not, like when you are trading live with a live account and you did lose money, no matter how much, never hold the stock. Okay, so now we're going more in depth into entries and exits. Like a big thing that I get from people is that I don't know when to buy and I don't know when to sell. So again, I'll explain, going back and forth, like going back all to the beginning. Okay, you are a beginner trader. You have no idea about trading. You never tried it. You never did it before, right? You just got think or swim. You're in front of think or swim. You see what I see in front of you. You have VWAP. Only VWAP, nothing else. No RSI, no MACD, just VWAP. You have the volume indicator. You went to finviz.com, a screener, or Webull, or any other scanner, screener, and you found the top 5 trending stocks of the day. You entered one of those, and it's stock that you have no idea about. So, like going back to that again, you have to like make sure that the stock itself, like just like I said, you have to know the pattern, but you also make sure that like the stock is trading with the right info. So, what's the market cap? You have to make sure that the market cap is good. Like if the market cap is above 1 billion, it's going to be less volatile than stocks that are less than 1 billion. You have to know the market cap. You have to know the average volume. There's so many things, but it's also a quick DD. It's something that is very quick. You can open just like Yahoo Finance real quick and see it for yourself. But the reason that we check those things is just to make sure that like we're protected, that like we invest in the right thing, and it's not like just a warrant or a stock that can just like pause and take all your money. So after you do that DD, after you find the stock and you enter it into your Thinkorswim, you basically find it in your platform and you prepare for a possible trade, right? So again, we want to make sure that we look at the charts with the VWAP. This is a key element that we want to remember. Another very, very important key element that we want to remember is that like the first 30 minutes of the market open, that's the most volume. So you're going to see a lot of stocks, just like we see SGMS in here. SGMS, that's the name of the tick. It basically popped on the first 30 minutes of the market open, and actually even like 10 minutes before 10 Eastern time or 7 p.m. here in the Pacific Northwest. 10 minutes before that, it dropped completely and it sold off. Okay, how do you prepare for this? How do you trade this? And how do you make sure that you're like always profitable? So like the approach that I'm gonna take if I want to trade this is, first of all, when the market opens and I find this stock and I'm interested in trading it. So as we can see, we have pre-market walls. Again, coming back, pre-market, gray chart. Okay, so we want to make sure that the stock itself is higher than the highest point of the pre-market. Okay, that's a key indicator. Once it passes the highest point of pre-market, it means that it has a huge potential into going up in price. So as the stock opens up, we can see in here there was the highest point of the day. There was the highest point of the day pre-market. It sold off a little bit, and right at the open, we have a huge candle. So a lot of people would make the mistake of buying it in here out of impulse, right? But we don't want to do impulse. We want to do pulse, okay? The chart goes up and down, okay? How do we play it? How do we get into it when it goes up and down? So what would I do as an intelligent trader and someone with like an idea of how the stock market works? In here, we can see that it goes up and it blows up, but there's still the pre-market wall. There is the highest point of the pre-market, right? So I want to enter while it passes the highest point of the day. So in here we can see the highest point is 26.5. Okay. Now please ask me or ask yourself, why do you think I want to pass the highest point of the day? Why? What's behind it? What's the logic? So another like a big thing that people don't understand, like why the pulse? Why the stock go up and down? Why stocks change in price like that? There is a lot of orders on the chart itself that are waiting to be filled. Okay, so a lot of times, like in here, as we can see, you have a big red candle. A lot of the times, those huge red candles are because stop loss, right? So let's just say hypothetically somebody bought the stock in the 27.7 levels, right? And he's like, okay, when it goes to 27.6, I'm going to place a stop loss. And if it goes to that point, it's going to sell my position, close my position, and I don't want to lose more money, right? But the thing is, it's not just one person that did that. It's a few, like a bunch of other traders that did that in that area. Okay, so one can have a stop loss order at like 27.6 and one can have a stop loss at 27.5. But when you have all these orders accumulate, right, that creates a huge candle, right? So if you are trading momentum and you're trading pulse, when you trade momentum, there is a lot of volume involved, okay? And you can take advantage of that volume. That's what I do with my alerts, and you can do the same thing by yourself alone. And this is something that this strategy will never be burned out. Okay, because it's basically like it's like science. Okay, you enter with everybody, you exit before everybody, right? So what you want to do, you identify the highest point of the day and you mix that pattern. Okay, so remember guys, this isn't like we want to do things that like happen every day, but at the same time every stock is different. Okay, you don't want to rely on just one thing. You want to have a lot of other strategies. Okay, so we want to be prepared for everything, but we have a huge weapon in our arsenal. We have something amazing here. We have the VWAP. The VWAP basically translates us what's going on, where the stock is heading. Okay, so just like I said, it passes the highest point of the day. That's when I would enter. I put a stop entry order. Stop, if anybody like ever used a stop loss, you also have the option to buy with a stop. And buying with a stop basically means that your order will be executed, your buy order will be executed at the stop price that you put. And that basically makes the stop price an activation price. Okay, so if you are trading in here and you're waiting for the stock to pass the highest point of the day, you can put your stop entry at 26.5, and once it passes that price, that's when it buys the stock. Now, why is it so good and why is it so overpowered? Like, why is it such a powerful method? Why is it so good, and why it always generates money? Because just like I said, there's other orders that are waiting. Okay, there are other people that have the same strategy and they're waiting for the stock to go up in price. Okay, but they also want to only enter when the stock goes up, because imagine you're in this area, right? The stock is trading at 25.22. A noob mistake would be to buy it, right? Just to buy it, and then it can just sell off, right? But what smart people want to do is they want to make sure that, like, once it passes that point, once it like keeps going up, that's when you enter. That's why there are other stop entry orders in that area, and once it passes that area, all these stop entry orders are activated. And at the same time, there's also a lot of impulse buyers. Okay, a lot of people that panic and they see all this activity and they just buy into the highest point. But you have the advantage, you have the view up. So you got into this point, right? You can put a small stop loss, like even a tight stop loss in the end of the candle, and you can just let the stock ride. Once it hits the highest point of the view up, that's when you want to get rid of it. Okay, amazing, right? Very, very easy, right? Sounds easy, very, very doable. Okay, we have a confirmation, we have something that basically translates us, tells us all the move. Okay, again, as a beginner trader, it basically tells you everything you need to do, right? You just wait until it passes the highest point of the day. Okay, and every time that it passes the highest point of the day, you can even add more and more entries. Okay, so it really depends on the pattern itself and the stock itself. Sometimes what I just explained, when I enter the highest point of the day, I would wait until it would hit more highest point of the day, right? So like it can even hit that highest point of the day, go up to like 27 and then go down, right? So I would wait until it would break that 27 again and enter with more. Again, this is not something that's going to happen with every stock, so you have to like have your own experience and do that for a while to be more brushed in it. But this is something that you can do any day with the top volume stocks. And why the top volume stocks is because like this is the stocks that are traded with the most volume, most people use them, and those companies have smaller market caps, which means that there's going to be more volatility. These stocks are more likely to go up and down 100 and 250% a day. So when you know how to play them right, because again, you have the view up in front of you, right? You have the view up. The view up basically tells you this lower price, right? This middle price, this high price, okay? Here good to buy, here good to buy, here not good to buy. But the view up changes every day, and it changes like on the chart, it changes every day, and it also changes with the trend. Okay, so if there's an offer and there's a huge sell-off, the view up is going to be very, very like on a downtrend itself. But if there's a volume spike and a buy spike, the view up is going to change, just like we see in here. But because there wasn't any continuation, the view up just went up on the first 30 minutes of the day. That's when you have the most volume in the market, okay? That's when most people take a break from their job, or before they even go to their job, that's when they try to make like one trade a day. And yes, this is a way that you can make one trade a day and basically make a few percent, 3, 5, 10%, however you play it, with your experience, with time that you do it. But basically you have the view up, it tells you when to enter, it tells you when to exit, and it helps you with one of the biggest beginner mistakes is when to buy and when to sell. Because a lot of people tell me that like they sold in areas that they don't really need to sell. But basically with the view up, you can tell when it's on the highest point of the day or when it breaks the highest point of the day. That's when that's like you need to get out. Don't roll it, don't ride it, don't let it, like, don't wait until it goes more up. Okay, in the end, what you need to look for as a beginner trader is consistency overall. you only need consistency. Okay, so the biggest problem that traders have, one of the biggest problems that traders have is like that they're looking for home runs. Okay, and home runs, sure, they work. Okay, but they're not consistent. Not every day you have home runs in the market. Not every day you have stocks that go up 100%. But this strategy, what I showed you right now, this is something you can use every day, even if you have stocks that are up 30%. You can do the same thing. You can do the same thing with the big stocks, Apple, Tesla, right? But with the top 5 gainers of the day, if you do this strategy right, you pass the highest point of the day, you enter with the pulse, and then you close when other people have these orders that are waiting to be filled. That's when you're going to make that profit. Okay, so I want to thank you guys for watching the video. This is it's been a long class so far, but it's a very, very important topic. It's a very important point because a lot of traders are just trading out of a gamble approach. So this will give you a little bit more trading confidence. I want you guys to try it out first on paper, give it some time, give it the experience, and then take it to a live account and see how it works. Also follow me on Twitter for free trade alerts. So and another thing, guys, I want to say thank you for all the new followers and subscribers. About to hit the 2,000 subscribers, so leave a like, leave a subscribe. Till the next one, guys. Peace.